I think we got Don.
Don,
How are you?
there he is.
Sorry, nothing like a backup plan. So sorry about that. I don't know what happened to me.
All good, man. You're
Very
here
nice to
with
see you
us
guys.
now. You know what, Don? We were able to give you some nice words, and we were able to prepare the audience for some of the questions that we were going to ask you about. And so I hope that we've given the audience enough little preview where we can start getting some potentially questions from the audience in here for you. But I mean, let's get right to it, Spence. If you want to ask Don that question that you.
Well, yeah. The first thing I guess we should probably hear it from your own words. I explained briefly what ICR does, but explain like your role in the ecosystem, in the markets ecosystem.
Yeah, sure, absolutely. We advise companies on communications around IPOs and go public events. So whether you choose to do a direct listing, do a SPAC transactions or an IPO, you're going to have to pick banks. So you want to make sure you pick the banks that are right for the company. And then you're really going to have to make sure you've got the right messaging and you tell your story effectively to the audience you're trying to communicate with, whether it be shareholders, institutional shareholders, retail analysts, or individual investors. So we help companies across the board. We do a lot of work in all sectors, but healthcare is our largest sector.
So let's just jump right into it. What I was just asking Spencer, I said, Spencer, do you have a feel for what the SPAC process has been like for healthcare names? Has there been more or less healthcare SPACs recently? We know that there have been a ton of, smart energy, renewable energy, electric vehicle companies. What about the healthcare market?
Yeah, no, good question. And it's funny, the some of the electric vehicles and flying vehicle stories get a lot of attention. The reality is when you look at the numbers, whether it's SPACs or it's IPOs, about 30% or so have been focused on the healthcare space. And so you see a lot of activity, in particular, in both cases, SPACs and IPOs. I think you've seen a concentration in things like telehealth, biopharma, and some med devices as well. But I think the IPO market now, I think if you look at the third quarter, which is coming to a close here, I think healthcare IPOs were over a third of all the deals, raised almost $5 billion in capital. In the SPAC market, it's tricky because when you look at a SPAC that goes public, sometimes they target a sector, sometimes they don't.
Right.
Healthcare focused SPACs have been less than 30%, but you've certainly seen some SPACs that were generalist also buy healthcare related businesses.
So a strong quarter on the IPO front for healthcare companies. What does that tell you going forward? Maybe for the end of the year, is demand on Wall Street for these companies, for the sector, is it healthy? You see it increasing, you see it staying steady, you see it decreasing?
Yeah, I think if you look at year to date, I think the return on all the healthcare IPOs is about 23%. I think that gives you a little bit of a leading indicator, which is there's more to come. I think of the deals on file, it looks to be about the same. I think there's a couple of things. On the smaller cap side, certainly you see a lot of life sciences and biopharmaceutical companies. You have definitely seen a big shift in telehealth, across the board. I think as all of us have lived through the pandemic and how we shifted purchasing patterns and how we consume healthcare, a lot of these companies have grown very quickly, and you see them accessing the capital markets. So we think the year is on track to be overall number of IPOs will be a record compared to any time in our history. And we continue to think healthcare is going to be probably a quarter to as much as a third of the overall IPO market. And we think we're set up from a pipeline perspective pretty good for 2022. There are a lot of growth equities, and the what I like to tell people is the best way to track this is really to just look at where the VC money goes.
Sure.
And interestingly enough, the venture money maps very closely to around that 30%. So if you follow the money, it tells you where the IPOs are going to be.
So do you have any feel for where the VC money is going for 2022, maybe 2023 even?
Yeah, it's a great question. You kind of have to wind back and look at it from a few years ago. And then as you see the bigger rounds, like a Series C or a Series D, it tells you these companies are getting closer to public company ready. But I think I think we're going to see across the board strength. There's probably two types, right? A little bit more developed healthcare businesses that have revenue that are of size and scale to go public. I think you see that more in the telehealth space, healthcare services, and certainly in some of the device categories. I think when you look at the life sciences space, obviously a lot of those companies are in development phase, and the capital markets have been very willing to fund some of those businesses, even when they're in their earliest stages of development, just because of the potential addressable markets and the types of issues and diseases they're addressing.
Don, you mentioned telehealth. The first thing I think of is Teladoc, which, for better or worse, has been the poster child for telehealth on Wall Street. And my knowledge doesn't go much more beyond. I'm sure most people, they only know Teladoc, but you're saying there is an entire parade of companies coming right up behind them. Give us a sense, like, how crowded is the telehealth space right now, or not crowded?
Yeah, I think the way we like to think about a lot of these is how we consume it, but I think the broader spectrum includes how potentially doctors are using technology.
Sure.
You also have seen a tremendous amount of innovation, including in people broadly call it healthcare IT, but it's how people get paid. You've seen it in claims processing. So you've seen a tremendous amount of innovation out there, and some of these companies have gotten to pretty of size and scale. I think you're going to see more of it. So I think, no doubt, from a consumer standpoint, we see how we consume it, or maybe you see from a services side some of these clinics that have rolled out. So, but behind the scenes, there's a lot of companies developing technology and healthcare IT to address some of these emerging markets.
Certainly. And, I think telehealth, I think you just touched on it there a little bit, but telehealth is sort of, in my opinion, tangential to, like a service. They're providing a service. Obviously, we've had, yesterday, we had a couple companies on that were providing services. Can you speak to sort of this shift, I guess, this evolution into a healthcare company as much more of a service, especially when a lot of us are remote nowadays due to the pandemic?
Yeah, I think, look, when you think about the services, again, I think people think about it as consumer services. There is an entire software sector trying to address the doctor-patient relationship and even patient management. There is a tremendous amount of people trying to essentially standardize or create efficiency from a patient information standpoint. And then I think, in addition, there's, in the broader ecosystem, there's a complex payment ecosystem. Who's paying? Are you paying? So you also see claims remediation businesses. So there is a very, very large opportunity, because we spend so much on healthcare and how some of these companies are solving problems for the healthcare system. But I think you're going to continue to see healthcare IT broadly, or whether we want to call it health tech, be a pretty big chunk of the IPO market as it relates to the sector itself.
Don, off the top, you said you advise companies whether they want to do IPO, a direct listing, or go SPAC. Let's pretend I'm a healthcare company and I'm ready, to go public in some way, shape, or form. Why would I IPO versus do a direct listing versus do a SPAC?
That's a great question. When we talk to people about that today, if we wound the clock back to 10 years ago, they would have said, hey, what are you going to do? I'm going to sell myself, or I'm going to go public. It's kind of like the Price is Right show. Today you have door number one, an IPO, door number two is a SPAC, and door number three is a direct listing. And the great thing about the capital markets is the capital markets has been able to innovate to solve problems or challenges for companies. Because even if you look at yesterday, Warby Parker listed, and they didn't need to raise capital. They raised a lot of capital privately. But what it demonstrated is the capital markets found a solution, because as you guys well know, if 5 years ago we said, hey, we're going to do an IPO and it's going to be 100% selling shareholders, people would have ran out the back door and said, I'm not going to touch that thing ever. Now, all of a sudden, this direct listing approach has solved for that, where existing shareholders can sell. So when you think across the spectrum, I think, and this is why I think you're seeing the surge in capital markets activity, there are solutions for every company. based on how much capital they need or don't need, based on the speed with which they want to get to the public markets, and they can choose door number 1, 2, or 3. So I think what you're going to see is certainly, let's talk about IPOs. A healthy market. I think the pipeline looks great. I think the SPAC market had a little bit of a once in a lifetime event in the first quarter. I think you're going to see that normalize more. You've seen it in the IPO market. There were almost 300 SPAC IPOs in the first quarter. That's now settled down to a pace of about 20 to 30 a month. That's a little bit more normalized to probably, call it 50 to 75 a quarter. 300 in a quarter is not good for anybody.
Yeah.
And then the direct listing market has spiked up. And I think why you're seeing that is a professional, institutions can do $100 or $200 million private round and buy as much stock as they want in the private market for a soon to be public company. And I think they've all gotten more comfortable with a company doing a direct listing versus traditional IPO.
All right, I want to step in here because I have to go over to track 2, the cool track. I'm going to leave Don and Brent.
Watch it.
Watch it. All right. I'll see you guys over there. Don, thank you so much.
Take
Brent,
care.
great job.
Ladies,
thanks for having me.
I'll see you guys over.
And we'll keep it going here a little bit longer, Don,
Sure.
if that's cool with you. So when you just were talking about, the amazing breadth, the great quantity that was happening there, and when that was happening, I was sitting at my desk considering this, and I was sort of going, this is a new normal. I think the SPAC process had gone well for so many companies that it just seemed like to me a lot more companies were going to be doing SPACs continuing. How do you think, what's going to be the evolution of the SPAC? Is SPACs going to be maintained at kind of this pace that we're at right now? Or do you see the SPAC process kind of like evolving into something that maybe a lot of people don't have insight into yet?
Yeah, no, I think that's a great observation. And I think evolving is the right word because when you think about where this SPAC market was 5 years ago, which is nowhere, it was companies that probably shouldn't have gone public were using the structure. I think what you saw earlier this year is a lot of companies that absolutely could use the structure did it, and they did it with great success. But there were some that probably were using it prematurely. I think where you're going to see it evolved is companies that are more public company ready, that are of size and substance, that the structure actually helps. I think the institutional market has already, and the retail market, by the way, has spoken. They're not buying these deals on announcement anymore. They're paying attention to the business, what type of forecast and other forward-looking information they're providing, and really trying to evaluate the companies before jumping in. And then I think when you think about just the SPAC, not the target market, but the SPACs themselves, you're seeing the SPACs that are going public increasingly are serial issuers. So it's people who haven't done this the first time. And the reason is, it's like anything. If you have a SPAC sponsor that made you money last time, you're much more likely to bet on them the second time. And I think for some SPAC sponsors who have not done so well in the past, I think investors aren't going to bet on them in the future.
Gotcha. So we're going to kind of wrap here in a sec, Don. I got one more good question for you. I think this is what the audience is excited to hear about. So, speak to us about valuations within the space really quick. Do you think we're on par right now? Do you think we're a little expensive? Do you think we're a little cheaper? Where do you think the valuations are right now?
Yeah, you think market or healthcare?
Specific to healthcare. Let's stay.
Yeah. It's interesting. I think it becomes so company specific because even if you just take a look at the IPO market, if you look at the best performers so far this year, I think a therapeutics company was the number one performer. I think it was up 150%. I think it's Adagio is how you pronounce it, ADGI.
Gotcha.
But if you look at it, 5 of the top 10 performers were all healthcare. But at the same time, 5 of the bottom 10 performers were all healthcare.
Interesting.
And so I think when you look at the market, it's company specific. I think it's a good IPO market. I think investors are paying attention to high quality deals, but that doesn't mean every deal is going to work. And so I do think you'll see quality transactions come to market. I think you're probably going to see some deals that don't go so well. And I think the message really for investors is do your homework. You can listen to road shows. Try to do a little homework before you buy these things, and certainly tune into your show so that you get some great feedback on what stocks to buy.
A ton of good conversation we just had, and Don leaving you with probably the wisest words: do your homework. Can't get much more simple than that, but very smart, wise words here, Don. Don Duffy, he's president of ICR. We had a blast starting the session off with you today. Thanks a ton, Don.
Thanks so much for having me. Have a good one.
Yes, sir. You too.